Whether you've been working on your finances for years or you're just getting started, it can be difficult to know when you should be saving and when you should be investing. Alright, so savings is the safer route because the dollar amount in your bank account won't typically decrease unless you withdraw your funds. But interest rates on savings account don't allow your money to grow very quickly. The other factor is that interest rates are often lower than the rate of inflation. This means that your savings could lose purchasing power over time. Now, investing your money to receive higher returns and beat inflation is a solid option. However, investing is more risky and there's no guarantee the value of your investment will increase. I just bring this up to illustrate the differences between savings and investing. So in this video, I'm going to break down the differences between savings versus investing so that you can be more informed in handling your personal finance. By the way, if you guys are enjoying the content so far, please do me a favor and tap that like button. It really helps me out. Consider subscribing to the channel for more finance and real estate videos like this, as I'm posting several times a week. Alright, so you may be wondering, should I save or invest my money? And to be perfectly honest, that answer depends on your goals and your financial situation. But don't worry, I got you covered. We're gonna unpack both. So having the safety net of savings makes financial sense no matter what your current situation. Remember, it's important to have an emergency fund if you ever lose your job, you may need money for a down payment for your first home, or to achieve other life milestones. However, at some point in time, once you've stockpiled enough cash, you should start reallocating some of those savings to investing if you really want to maximize the amount of money you can earn. So whether it's building your wealth or planning for long-term goals like retirement, investing is a great option. Let's first start with savings. So saving is putting money aside bit by bit. Now typically, usually save up to pay for something specific like a holiday, a deposit on a home, or to cover any emergencies that might pop up. Now with savings, you're usually putting your money into cash products such as a savings account and a bank. Investing, on the other hand, is taking some of your money and trying to make it grow by buying things you think will increase in value. So some common investments include stocks, bonds, and real estate. Now the very first step in terms of savings would be to create an emergency fund. Everybody should do their best to build up an emergency savings fund. Now with an emergency savings fund, the general rule is to have 3 to 6 months worth of living expenses saved up in an instant access savings account. This should include housing, food, and any other daily essential. Having an emergency fund means you have some financial security if something goes wrong. Now after you set up your emergency fund, you should continue to save towards any other future expenses. Set up your savings goals and put away enough to buy what you want. For example, this could be a house deposit, a wedding, or a trip. You could also start to think about investing your money. Now when looking to invest, it's important to understand your financial goals. Specifically, are they long, short, or medium term? So short-term goals are things you plan to do within the next 5 years. Medium-term goals are things you plan to do within the next 5 to 10 years. And long-term goals are ones where you won't need the money for 10 years or more. Now my recommendation for investing, whether that's the stock market or one of my favorites, real estate, is to think long-term. However, investing in the medium term can be an option, but with any type of investment, you have varying cycles of ups and downs. With that being said, guys, it's never recommended to invest any money you may need in the short term. This money is typically better off being saved in a liquid account that is easily accessible. A high yield savings account is a great option to store money you may need in the short term. So again, if you think you'll need money in the near term, meaning less than 2 to 3 years, avoid investing it because of the additional risk you take on by putting your money in the market. Instead, use this cash to build up a savings that offers you a lot more security. Now to make sure you are earning the greatest return on your savings, especially when you're relying on it as an emergency fund, use a high yield savings account. Now with a high yield savings account, just make sure you choose one that has no monthly fees, low or no minimum balance requirement, and an interest rate referred to as an annual percentage yield or APY that's higher than a normal savings or checking account. Now for long-term goals, you may want to consider investing because inflation can seriously affect the value of cash savings over the medium and long term. Now the stock market tends to do better than cash over the long term, providing an opportunity to grow your money over time. Now you can lower the level of risk you take when you invest by spreading your money across different types of investments. spreading it out across different types of investments is called diversification. So your long-term goals allow you to take on more risk because you're not relying on these funds so soon. Now, many experts suggest that you can be most aggressive with goals that are well into the future, meaning beyond 10 years. Now, if this all seems like a lot, there's good news. The best banks, credit unions, and brokerages usually make things easy. So once you found the right financial institution and set up automatic transfers, your money will grow without you needing to lift a finger, and soon your emergency savings goal or retirement won't feel so far away. I'm really hoping this video helps you to analyze your own personal finances so that you can make a more informed decision for yourself. If you found value in this video, do me a favor and tap the like button and share it with others. It helps to support and grow the channel. Don't forget to subscribe and turn on the notification bell as I'm posting valuable new content every week. Thanks again for watching, and until next time.